Hi, everyone, and welcome to the Propcast. My name is Louisa, host of the Propcast and co-founder of LMRE, the global PropTech recruitment and search consultancy. In this podcast, we will explore how the digital evolution of the real estate industry is impacting the property market. The aim of each episode is to introduce you to a PropTech innovator and discuss how their work has created a shift in focus when it comes down to digitizing the built environment. If you're interested in finding out more about PropTech or applying for a job in this space, or keen to know who the big players are that are moving and shaking the real estate industry up, we have you covered, and we will be bringing you an episode each week to connect to the VCs, PropTech startups, and real estate professionals from around the globe. Also, a big shout out to our sponsors of the podcast, Dreamtech and Pretech, who you will hear from during the episode. Drum roll, please. I'm very excited to announce the launch of our brand new website. It's been designed with you in mind, so it's much easier to use, and if you ask me, it's extremely nice to look at. Shout out to the team for all that hard work designing and building all the features that our audience asked for. Applying for jobs or briefing us on a role has never been easier. Please visit www.lmre.tech and sign up for our emails to receive exclusive updates on the latest PropTech jobs and the best candidates in the global PropTech market. Hi, everyone, and welcome to the Propcast. On today's show, we will be examining what the future of residential looks like, and I'll be asking the one and only Brad Hargreaves, the founder and CEO of Common, all the questions which you want answers to. So thank you so much for joining me today, Brad.
Thank you so much for having me on the Propcast, and excited to be here.
Beautiful. Now, on today's show, we'll be discussing what co-living really is, how it's evolved, what renters look for, and how the market is changing. And oh my, has it changed a lot in the past few years? And who knows what's to come? Brad will be the one to answer these nitty-gritty questions. We'll be also chatting through the M&A space, which obviously Common has been involved in, launching into new markets and continents, which is super exciting, and finishing off with what the future of residential looks like. But first, before we delve into these questions, a quick introduction to Brad and his business Common, which is the nation's leading residential brand that designs and manages multifamily apartments with more than 6,000 residents across 10 markets in the US and soon to be the UK. Is that right, Brad?
Soon to be the UK. I think we're above 7,000 now in the US.
Oh God, so I was 1,000 off. Sorry about that. But before founding Common in early 2015, Brad was a co-founder of General Assembly, which is a global education institution with campuses in more than 15 cities worldwide. Most recently, he was a venture partner at Navron, General Assembly's lead investor. And Brad is also a bit of a A-lister. He has been named Ernst & Young's 2020 Entrepreneur of the Year Award, Vanity Fair's The Next Establishment, and Crane's 2017 40 Under 40. You don't look a day past 30, by the way, Brad. But now we've, given the audience an introduction. Let's start with the questions. Talk us through your journey to founding Common and tell us a little bit more about the product as well.
Yeah, thank you. And, I'd start off by saying, I've always been really excited by industries that touch both the physical and digital worlds. Never really been satisfied with just being on one side or the other, but think that, really special and magical things can happen when you combine the two. Prior to Common, I started what became the largest technology trade school in the US called General Assembly. We really focused on skills like web development, UX design, data science, digital marketing, which we think of as 21st century high skilled trades. And we grew that business to around 20 cities with brick and mortar campuses, heavy online flipped classroom component. One thing we saw while doing that is that many of not just our students, but our instructors, our employees would really struggle to find a quality, affordable place to live in those cities. We were in locations like New York, San Francisco, DC, Los Angeles. We opened a campus in London and Hong Kong. And the housing challenges were always at the forefront. When we would hire an instructor and they would move to a city, they would often look for a room as opposed to a full private apartment. And it really cued us into some of the, frankly, opportunities to create types of housing that were designed for these different uses. So whether it's, smaller private spaces, more shared spaces, live work spaces.
Yeah.
And so we built Common as an operating platform and a design firm that was really geared to innovative build to rent models. And so in the US, you have and I'm happy to get into some of the distinctions between, the American and the UK rental sectors. But you have a really robust build to rent sector in the United States, multifamily here. We've about 40 million rental apartments in the US, and it's almost all purpose-built rental. And however, there's not a lot of differentiation in the new buildings that are delivering. It's pretty much all studios, 1 bedrooms, 2 bedrooms.
Yeah.
And so we looked at this and said that, there's a broader range of options that serve, Americans of all types. So we started doing co-living, which is, in our vernacular, it's shared apartments.
I was about to say, what is your definition of co-living?
Yeah, exactly. So for us, it is, multiple bedrooms that are private around a shared common space. And we are also doing more micro apartments. So units with individual kitchenettes and bathrooms that open into lots of shared amenity spaces in the building. So we really specialized off the bat on those 2 typologies. That led to a lot of growth. That also led to more work with institutional partners, larger owners and developers, which actually now, if you look across Common today, we're managing both kind of conventional private apartments as well as co-living and innovative units. So across the 7,000 units or so we manage today, about half are co-living and the other are more conventional setups. And there we're approaching it with more of an operational lens toward innovation, like running robust communities, providing more opportunities for tenants to connect, while also centralizing some set of operations that make the building run more efficiently. So things like lease administration, credit checks, background checks, customer support, inside sales, a lot of opportunities to get efficiencies, lower the cost of operations by centralizing those. So there's a broader platform today beyond just co-living, but that is probably the most exciting thing we still do.
With all these sort of extras of your platform, community building, you mentioned obviously credit checks, everything. Is this all in-house? Do you have some external partners which you sort of work with?
Yeah, so we've been very focused on building a vertically integrated property management. So we do everything. What we don't do is development and ownership. So we are not going out, buying buildings, entitling sites, co-GPing projects. We would be competing with our clients.
Leave that to the developers.
Currently, I mentioned we have 7,000 open. We have around 22,000 signed and under development. So currently in some stage of construction.
Wow.
And we wouldn't have that. We wouldn't be able to achieve that scale if we were going out and buying every site.
Doing it yourself.
Ourselves, and the neutrality that we have where every one of our buildings is a third-party management contract.
Yeah.
Really strong value proposition for us.
One less thing you have to worry about, and that sounds like it'd be a lot more expensive.
Hi, I'm Nelson from Property Quants. We run a hands-on, in-depth course that will teach you to apply data science and machine learning to real estate. To learn more, visit propertyquants.com/training. We also run a revolutionary course that will allow anyone to gain data science skills without needing to learn programming. To learn more about that, visit thenocodecourse.com. On either site, be sure to key in the code LMRE5 for a special 5% discount.
So obviously we've just had the last 2 months, things picked back up, gone back to the new normal everyone's talking about. The pandemic, obviously lots of, loads of people, not just students live in your accommodations, I'm sure it's professionals. How did that sort of affect your business? And you've obviously still carried on growing. And we'll go into, acquisition you had. Were you hit badly? Doesn't look like you guys were somehow.
Yeah, it's an interesting past, 15 to 18 months. I would say there was an initial shock of our renter base, for instance, probably 80% that pretty much disappeared in mid-March of 2020. These are people who were here on a visa, who were staying, not on a 12-month lease, on some short. But, the majority of our residents were here long-term. Our thoughts around value proposition for the customer have always been, for co-living, for micros in particular, have always been really centered on affordability. That is, community is important. It's a great value add. The experience is key. But if you're not offering real value, it's going to be very difficult to scale. And then it has to be anchored in affordability versus a studio or a 1-bedroom apartment in a similar quality building in a similar neighborhood. So that really helped us through the pandemic because affordability was always in demand. You can go rent a room in a great neighborhood for, $1,100, $1,200 a month. That never stopped being exciting for people. So even though there were operational challenges of, we had to ramp up cleaning, we had to provide more shared goods, we provide shared kitchen and bathroom supplies. Now suddenly people are in our buildings 24/7, going to the office every day. So They're living, they're working, they're doing everything in our buildings. And that was a real change. And we had to adapt to that. But overall, there's been a real positive shift for us, particularly on the ownership side.
Yeah.
More owners are thinking about how can technology, how can innovative marketing drive performance of my assets. I think prior to COVID, sometimes it was hard to get attention from owners and get them to hear us out on how we're doing marketing, how we're doing sales, how that's different when their buildings are 98% occupied and they're driving 3 to 4% retail.
Yeah.
Now, suddenly, they dropped to 80% occupied and they're looking for other solutions. So that's been a big driver of growth.
And so I presume the all the extra amenities that you provide, the sort of community, all these other plus ones, are tenancies longer for you as well than sort of the average tenancy as well?
Yeah. So, for us, we've always been focused on longer term stays. The, quote unquote, co-living products that got hit the hardest through the pandemic were those that were more dependent on short-term stays. For us, and this is just kind of anchored in how we think about ourselves as a management business, the majority of members are here on 12-month leases. They are here long-term. And I think that gave us a lot of stability through the pandemic. We didn't have to backfill our entire membership last summer. So our occupancy was back up into the 90s last fall. And, we've been continuing to trend positively since then. So I think the focus on long-term stays was a really, really positive thing for us. And it's something we're committed to going forward.
Yeah. Well, no doubt as your brand gets even stronger, tenancies will get even longer. So fingers crossed for that. Now, you've done an acquisition as well. Congratulations. But in your space, I think particularly, there's not too many dominant businesses. Obviously, I would say yours is. Congratulations. So you acquired Star City, who, am I right, acquired Ollie? Or did you also acquire Ollie? Talk us through it and talk us through the reasoning behind this sort of M&A, which is so exciting.
Thank you. So there's been a lot of consolidation in the co-living sector, particularly over the past 6 months. So the first one that happened is Ollie, which was a US-based co-living operator. They're West Coast based. Star City was unique in that they also developed. So they had a number of land sites that they had acquired. They were in the midst of the planning process. So they got hit. They were doing a lot of very innovative things. They were probably our largest competitor in the United States.
Yeah.
Really the double whammy from COVID. They obviously got hit on the management side from an occupancy standpoint, but the bigger hit was now suddenly it was impossible to finance new residential projects.
Yeah.
So if you were stuck with land holdings ready to be financed, that was a really, really challenging position to be because you couldn't cover the leverage.
Yeah.
And so that's a position they found themselves at the end really a couple months ago and started talking to us, and we ended up acquiring their management contracts, not the land holdings. We don't want to end up in that business. We ended up acquiring their management contracts, and we're really excited to take those new homes on.
Yeah, awesome. Congratulations for that. And obviously to acquire another business, you obviously have to have the capital. Talk us through sort of, I guess, a bit of your fundraising you've been doing as well.
Yeah, absolutely. So we've been very focused on finding investors that are aligned with the long-term mission of Common. Mm-hmm. This is a huge opportunity to create better ways for people to live and be innovative in the residential sector.
Yeah.
I want to make sure that we're aligned with investors that get that and are, betting on the time horizon we are. So we actually recently raised our Series D from a European growth.
Who was that?
Their name is Kinnevik. They're Stockholm and London based. They're a publicly traded growth equity firm with about 18 billion in assets under management. And I love them because they're a balance sheet investor. They're not a fund. So their target hold period is between 10 to 15 years, which is really aligned with how we think about our mission and how we think about the growth and trajectory of Common. It was a really, really great partnership. They invested about a year ago and put 50 million in total, which has really enabled our continued growth.
Yeah, no, definitely. And I guess we're buying, lots of our listeners, they vary from being obviously the investors, the technologists, the real estate folk. But obviously lots of people have gone through the phase of acquiring companies and also hiring, then integrating, old staff, maybe Star City, integrating sort of Common. The Propcast audience, we want to hear from you. We are adding a new segment to the podcast, and I'll be answering your burning questions live at the end of each episode. I'll be sharing all the tips, tricks, and insights LMRE has gained from being the global PropTech recruitment lead in this space. So please get in touch, head to www.lmre.tech, and drop us a message or question that you want answered. How have you sort of maintaining culture is something so important? You talk about sort of community, but what about like internal community and comment? Any sort of tips for our listeners listening in of how you sort of maintain that as well?
Yeah, absolutely. And I would say, the Star City acquisition from a people standpoint, I believe we brought on 18 employees from Star City. So it was relatively small. We're at Common, we're around 300 in total.
Oh, wow.
The bigger challenge we face is how do we maintain a strong bond and relationship between field and corporate? Because we're about 50-50 right now. About 50% of our employees are field level, porters, maintenance techs, leasing agents, and about 50% are corporate, which, range from our inside sales team, our leasing administrators, all the way to executives, engineers, architects and designers. So how do we create career paths for people, in the field to move into corporate? How do we create better bonds where there's empathy on the corporate side for the field? We actually returned to the office pretty early. We got back to traveling pretty early, partially because, half our employees are essential workers. They never stopped going to work. And so just having that alignment and shared empathy in the organization between field and central is, really fundamental challenge from a people standpoint as we grow and scale. And I think that really overwhelms at this stage any other cultural challenges we have.
Yeah. When you guys finally launched in the UK, whenever that is, no one quite knows. We know you're working on it. I guess maintaining that culture when it's across seas, that'll be even more of a challenge, but you don't have to face that challenge just yet. But you've obviously done a bit of research between sort of both markets. There's like some players, I think, is it quarters over here in Europe? What's the difference in the markets? Obviously, we know the US, as you said, has been very much a leader in the multifamily space. We're trying to learn from you, different sort of markets. Is there any sort of major trends you've seen between US and Europe?
Yeah, absolutely. So it's been really interesting to look at the various European players adapt different models, different takes on it, and then some US players such as Greystar begin to enter the UK as well. So we're paying a lot of attention. I mean, Quarters, I believe, sold their European operations and wound down their US managing two of their former buildings, one in Chicago, one in DC. So unfortunately, we had some groups fell by the wayside. We look at what the student hotel is doing as being in kind of a mix of uses that you would never see in the United States. The US has pretty strict separation of uses and zoning regimes, and you don't have quite that level of rigidity in Europe, which I think is super interesting. It's not rare to see buildings that are a mix of student housing and multifamily or hospitality, which is pretty rare in the United States. So there are certainly ways where Europe is ahead of the US, I would say, in terms of liberalizing zoning and allowing more innovative mixed operations and mixed uses. But I think for us in the US, it's funny, multifamily is seen as the most stable real estate asset class there is. It trades at lower cap rates than any other type of real estate asset. And it is really seen as a, safe haven, even, performed quite well through the pandemic writ large. Whereas in Europe, build to rent is still seen as kind of this niche emerging asset class. One funny illustration of that is student housing cap rates in the US trade at a significant premium to multifamily cap rates. So it's, 50 to 100 bips usually. Cap rate spread where student housing is seen as riskier. In Europe, that's flipped.
Oh, it's the opposite. Yeah.
The opposite.
Yeah.
And so I think that there are some fundamental reasons why that is, the locations of universities in Europe versus the US. I don't need to get into all that, but it does feel like a real market discrepancy, a market inefficiency where the same type of asset is valued in a relatively totally different way in Europe versus the US. I have to believe that that'll revert to a mean over time.
Yeah, for sure. Before we get to the LMRE part, which don't worry, I will walk you through it. The next question, it's a very big question, and it's, what's the future of residential look like? So let's just focus it from like a US standpoint, because it sounds a bit European market. We got a hell of a lot more research and some learning to do before we start drawing parables. Have you got any predictions with your crystal ball coming up in terms of your space that you're in?
Yeah, absolutely. So I think we're going to continue to see capital flooding into the build to rent sector. You see the kind of volume of capital looking for a return out there. Yields are compressed everywhere. So I think you're going to continue to see a really high bounty on new build rentals and continued demand for new build rentals, both on the single family home side as well as on the build to rent purpose built multifamily side. You're going to see even more competition for these deals, even more capital flooding in. And I think it will be really interesting to watch how planning departments, how the councils react to this, and a order of magnitude increase in the number of proposals that are going in, the number of new schemes as more international capital that's looking return that sees strong returns in Europe floods in. And I think there's a couple of regulatory implications that will flow from there. You're seeing play out in some countries on the continent now.
Yeah, and those exciting things. I'm sure you're excited for those to come into play. For those new to LMRE, we're a global recruitment and search consultancy focusing on placing the best talent into the PropTech and real estate industry. We're extremely fortunate to work alongside the best VCs in the ecosystem to help scale their portfolios and their own teams. We've even had a couple of them on the podcast, such as Metaprop and Fifth Wall, who joined me back in season 1. We've recently started a campaign on our YouTube channel spotlighting a number of VCs from around the globe to take the opportunity to spotlight their business, portfolios, and gain advice from the inside for those looking to access the VC world from both capital and talent perspective. So, are you looking for funding for your own business or interested in the VC landscape? How do they handpick their cohorts? Or if you're just a curious mind that wants to learn more, check it out. Head to LMRE on YouTube, or you can find their interviews on our website. Now on with the show. Well, we're coming to the end of the podcast. And Brad, what happens here is that we do the LMRE part. So the L is main sort of lessons learned in your career. M is sort of mention anyone or like a product you'd like to give a shout out to. R is what's the most rewarding aspect working in PropTech, or say co-living if you want to narrow it down. And E is what are you most excited about in terms of this space. So kickstart with what is the biggest lessons you've learned. And if you got 2, it's fine. I've got about 1 million.
I read this the other day, and I think it maps perfectly to the real estate industry, is that you generally overestimate what you can do in a year, but underestimate what you can do in 10 years. And I think that speaks incredibly true to the real estate industry, which is not fast moving, but when it moves, it can do tremendous things. So when you look back on kind of the arc of co-living and the arc of these innovative typologies in any given year, there's not a ton going on. But then you look at where we are today versus where we were 10 years ago.
Yeah.
And it is fundamentally different. I mean, the build to rent sector in the UK, co-living in micros in the US, and these sectors really have gone through a watershed over the past 10 years. So I would encourage anyone getting into real estate to really take the long view of it. It is an industry that rewards the long view. And that is, really something that from a capital standpoint, from an ownership, from a leadership standpoint, we try to hew hard to here at Common.
Awesome. Thank you for that, Brad. And okay, now it's time for you to give someone or a couple of people, a couple of businesses a shout out.
When I think about who I really want to win from Common, I think about people who bet on us very early on.
Yeah.
And that's not necessarily, back 5-6 years ago when we were getting started, although obviously I have a lot of love for those folks, willing to support us as we continue expanding our business. So I'm going to give a shout out to Brian Lee, who was our, boots on the ground over in the UK, really helping set things up for Common in London.
Yeah.
He flew over in June, kind of on the on one of the first flights they allowed, and has kind of been there by his lonesome, getting everything set up and working.
Yeah. Well, if he needs a friend for a drink in the pub, I'm around. Okay, now what about the most rewarding part of working in this space?
Look, it's people live in our product.
Yeah.
And it's hard for me to explain sometimes to people who come from technology, or, a piece of software or, a product or something like that. And, I don't want to diminish that, but it is really the level of impact we can have on people's lives is really extraordinary given what we do. And it's one reason we started our Noah brand earlier last year, which is focused on more aging workforce housing. So buildings that are typically 30 to 50 years old, that are affordable either due to subsidy or due to just their age and location. And you have a lot of families that live in these developments. You have a lot of retirees. You have people whose lives can be positively transformed if they're operated well. But that's something that really speaks to, why I get up every morning, and the fact that people live in our product is a really strong motivator.
We're having a direct impact. I like to think we do a similar thing here at LMRE and try and find people. Because like you said, you spend most of your time either at home or at work doing the job. So that's what gets me up in the morning. But like every recruiter, I've done the occasional placement that's not worked out. And it does actually hit home. We do have moral compasses, surprisingly. Okay, and last question for you. It's E. What are you most excited about for the future of this space?
I would say, I hear this a lot when I talk to people in the UK, and you mentioned it as well, of like, oh, the UK rental sector is in many ways at a much earlier stage than the United States. And that's certainly true. But I see a lot of really innovative uses of space outside the United States. What's some of the mixed use projects I mentioned in Europe, some of the ways different micro-unit typologies, technologies are being used in Europe. And I'm more excited, I would say, on a broad scale of countries and cities learning from each other and the ability for countries and cities to look at what works in one place and bring it to another. Whether it is the UK learning about purpose-built rental from US operators or the US learning from some of the really interesting kind of mixed use schemes that you see in the UK and on the continent. I think you're going to create better products and ultimately better ways for people to live when, you're taking experiments that were run in one place and bringing them to another. So when I think about Common as a global company, I never want it to be siloed where the people in the UK do their thing, US do their thing, people in APAC, they've got something going on. Like it should be shared learnings, experimentation, porting those learnings from place to place to improve people's lives, lower the cost of construction, and ultimately create more housing at an affordable price.
Which everyone loves living in as well. Thank you so much for sharing your insights and I guess all these tips of the trade as well. We've come to the end of the podcast, but I'm looking forward to catching up with you after the show. And thank you again, Brad.
Of course, Louisa, thank you so much.
Hey, this is Michael Beckerman from Cretech. I'm here to invite you to check out Cretech Plus, the first streaming platform devoted to innovation and technology in the built world, featuring new weekly videos from the world's leading real estate and tech professionals. The first month of streaming is absolutely free, and then you could use the code LMRE to receive 25% off your second month. To learn more, visit plus.cretech.com.
Thank you for joining us this week on the Propcast, and a big thanks to our guests and our sponsors, Cretech and Reamtech. Make sure you visit our website, lmre.tech, where you can subscribe to our newsletter, keep up with our industry news and events, or if you're looking for your next career move, it's all on there. The Propcast can be found on iTunes, Spotify, and YouTube, where all good content is found. Whilst you're at it, if you found value in the show, we'd appreciate it if you could spread the word and tell a friend about it, or even write us a review. And I'll catch you next week.